Welcome to this explainer. Today, we're decoding India's absolute best 46 investment plans for 2026.
Before we jump in, ask yourself, is this money for a house, retirement, or maybe college?
Right, because a real investment plan isn't random guessing. It's a mapped-out process to hit those goals.
We can easily group all 46 of these diverse plans into 3 distinct buckets based on risk.
Let's start with the foundation. Low-risk plans are all about capital protection and total peace of mind. Things like the PPF, FDs, and the Senior Citizen Savings Scheme, they offer rock-solid government-backed safety.
The PPF is super popular for a reason. You get a steady, guaranteed 7.1% annual interest rate.
Okay, let's step up to the middle ground. This is where we see balanced, steady growth.
SIPs, hybrid funds, and ETFs literally blend safe debt with growth-focused stocks to perfectly balance your portfolio.
And the best part? You can actually start an SIP with as little as 100 rupees.
Now, if you're chasing high returns, let's look at aggressive strategies for serious, long-term wealth creation.
If you can handle market bumps, mutual funds and ULIPs are fantastic for maximizing those long-term gains.
ULIPs are basically a 2-for-1. They grow your wealth while giving you built-in life insurance coverage.
But here's the real game changer. Choosing plans that also act like a legal tax cheat code.
Thanks to Section 80C, you can legally deduct up to 1.5 lakh rupees from your taxable income.
See, the PPF gives completely tax-free returns, while ELSS gets you the absolute shortest lock-in period.
Plus, the National Pension System throws in an extra 50,000 rupee deduction right on top of that.
But honestly, all these amazing options mean absolutely nothing if you just sit back and wait.
Starting at 25 with a tiny amount almost always crushes starting at 35 with more cash.
Like our source perfectly points out, time is the one thing in investing you simply cannot buy back.
That's because of compounding. Your returns earn their own returns, working real magic over uninterrupted time.
So how do you actually start? Just define your goals, pick your risk level, and watch the fees.
And definitely be careful. Anyone guaranteeing crazy 20% returns is likely hiding some massive market risks.
So, is your money sitting idle, losing to inflation, or actively building the future you want?